Hello and welcome to BQ Prime. You're watching Earnings with BQ, and my guest today is from Indigo Paints, Mr. Hemant Jalan, who is the chairman and managing director of the company. The company came out with good set of numbers, which was much above the industry average and peers. Mr. Jalan, let me start off with the numbers first. Revenue growth exceeding your peers' growth and also industry average. Where is the growth coming in from?
So you must appreciate that we are a slightly smaller company than the larger listed peers in the industry. The base being a little smaller than them, it is expected of us to grow at a faster top line growth rate than the rest of the industry, which is what we have been doing. Most of the growth is coming from our focus on the larger cities, which we had started about 1.5 years ago, where we were underrepresented till then by choice. And after we have shifted the focus there in the last few quarters, we can see the results materializing, that the growth rate in the larger cities is higher than the growth rate in the smaller towns. And that is a major reason why our overall growth is being propelled at a rate faster than the industry.
Mm-hmm. Uh, in that case, sir, is it possible for you to give us an idea of what is the kind of split between metros and larger cities and tier 2, tier 3 cities in terms of your revenue mix or volume?
So I don't have it separately for metros. We'll club the metros with the larger cities in India.
Hmm.
So if you take like in India, we have approximately 750 districts. Each district has a district headquarter town, which in most cases is the largest city in that district. So if we look at these 750 cities in totality, which will include the metros, but not be confined to them, until a year and a half back, I would say our mix was roughly 75% coming from the smaller towns and 25% coming from these larger cities. I would say that the mix is changing more now to 2/3, 1/3. And our goal is to first achieve a 50-50 parity. And that would only happen if the bigger cities continue to grow at a much faster rate than the smaller towns, which is what is happening.
Give us a sense of how aggressively you're pushing out tinting machines across your outlets. How many you did it in the quarter, and what is the kind of targets that you have?
So in this quarter or in the last 3 quarters, you'll find that there has been a steady increase in our tinting machine population growth. In this quarter, I believe it was somewhere in the region of about 470, 480 tinting machines. Last quarter, it was about 380, 390. And in the quarter before that, it was closer to 300. So the numbers are progressively going up. And, I would expect, all other things being equal, in this quarter for us to clock more than 500 or 550 tinting machines. So, the faster we can populate our tinting machines, that is what leads to a higher throughput per dealer. Because it is only when a dealer has your tinting machine that he's able to sell your emulsion category, which is the largest category in paints.
Yeah.
And that is what propels your sales at a much faster rate.
Give us a sense of your EBITDA margin as well, though it has gone up on a year-to-year basis, but quarter to quarter there has been a decline. Is there a raw material pressure which is building in now?
No, not at all. If you analyze our quarterly results for the last 3 years or even more, you'll always find that in terms of EBITDA margin, Q2 is always the lowest. And that has something to do with the product mix. See, Q2 is completely a monsoon quarter. So exterior painting slows down considerably during this period. So this is a time when there is more sale of interior paints. There is more sale of, distempers and the lower category products. So definitely there is a deterioration in the product mix that happens in Q2. Overall sales level in Q1 and Q2 are similar in each year. For us, Q3 is a much stronger quarter, both in quantum of sales as well as in EBITDA margins. And for us, historically, Q4 has been the highest quarter in every year, both in terms of sales and in terms of EBITDA margins. So we expect that to continue going forward. We definitely expect significantly higher EBITDA margins in Q3, and they will peak in Q4, as has been always happening.
How's October looking, given that there's been a
October
timely
has been
withdrawal of
excellent.
monsoon?
October has been excellent, and we have said that in our narrative. In fact, the growth rate that we clocked in October, we have not seen that in Indigo Paints in any given month during the last 3-4 years. So it has kind of taken us by surprise, a pleasant surprise, I may add. So October has been an excellent month. Fingers crossed for November and December.
And do you see that growth rate in volumes and value, going through in November and December, because you have the festive season, so there would be a lot of in-house or indoor paintings which comes in before the festive season. So is that volume going to get reflected in November, or it may get normalized by November and taper down by December?
Diwali is on the 12th of November. For most of the painting would have already happened by now.
Yes, yeah.
Also, we should remember that when we talk about the festive season of Diwali, it affects about only 50% of India. The entire South India and part of Eastern Belt like Odisha, most parts of Bengal, large parts of Assam and Northeast, as well as the state of Jammu and Kashmir, are largely unaffected by Diwali.
Yeah.
So it is more the Hindi-speaking belt which has a Diwali impact, and that is at most 50% of the total demand in the country. So when it comes to the other states, especially the southern states, they encounter a much more vigorous monsoon. If you know, Tamil Nadu has a strange timing of monsoon. In fact, we are in the peak of their monsoon right now, which will get over by the end of November. So for climatic reasons, typically southern states go up tremendously in sale between December and March, April. So I think the festive demand, bulk of it is kind of over in October. We have had some, of course, good upturn in the first week of November, but now that sale kind of draws down to a close. And in fact, you start feeling the effect of holidays, because there is Diwali, and then there is Bhau Beej, and in eastern parts of India, Bihar and Jharkhand, you have Chhath festival, which comes 6 days after Diwali. So you have some holidays which also intervene. So I would say the festive season demand has more or less played itself out by the end of October.
How do you see the raw material price panning out? I mean, do you see raw material prices like titanium oxide and others going up from here on? I mean, there have been some trend
they have
upwards.
been reasonably stable during the last 3 months. They had been on a continuous decline for the previous 12 months. I would say the decline started in maybe May or June of last year. And till June of this year, we saw almost a continuous steady decline. The last 3 months, I think they have been stable. So it looks like they have bottomed out. There has not been any appreciable movement in either direction during the recent months. So we just have to wait and watch. It's very difficult to predict the trajectory of these commodities. But at the moment, they look fairly stable.
Have you been able to pass through that benefit to the customers fully? Or you have kept some of it for your margins?
Whenever raw material prices start declining, what the industry has typically done is that you increase your trade discounts, and that ultimately gets passed on to the end customer. Lowering prices is a slightly more complex thing, because then the MRPs have to change, and that creates a disruption and all the inventory that is there in the pipeline. So change in the basic price is a last resort that the industry resorts to, only if the movement in raw materials is beyond a certain threshold. Till that time, variations in raw material pricing tend to get passed on by increase or decrease in the trade discounts that are passed on to the trade.
Mm-hmm. So, what kind of trade discounts have you passed on in the last quarter?
So there are many components of trade discounts. I
On
mean,
an average?
it's very hard to quantify because there are many components of it, some of which are permanent, some are by the way of cash discounts, which operate throughout the year and are fairly steady going from one year to the other. A lot of it are annual discounts, which are linked to dealers' growth rate, etc., which are also kind of steady from one year to the other. Then there are discounts by the way of tokens that you put into paint cans, which are substantial, which also don't change much. So only a portion of the discount, which is the monthly schemes, etc., that you give, which if you look as to what the schemes were a year ago compared to what they are now, those schemes are probably higher by 5 or 6% as a percentage of sale. So the overall discounts, may have risen from, let's say, 15% level to a 20% level, or if they were at a 13% level to an 18% level. And but now they are fairly steady and stable because there is not much movement happening in the raw material prices.
Finally, sir, you've been growing at a growth rate which is much above industry average and peers as well. If you can give us some idea of what kind of market share gain that you could have, taken in the last quarter or last few quarters, as you've been growing at above market growth rates.
It's a little difficult to quantify these things because aside from the listed entities, hard data for unlisted players, some of whom are significant, and also from the fairly significant unorganized sector which has always existed in this industry. That data is hard to come by, but basically, if you take the industry, the decorative paint industry at roughly 60,000 crores, then I would say that 6 months ago we thought we were at 2 to 2.5% of market share. I think we should end the year at closer to 3% market share. So we are still a relatively small player given the overall size of the market. But as long as we continue to maintain a top line growth which exceeds the industry, this continuous gain in market share would probably continue to happen.
One final question. Basically, you've been aggressively pushing your products across districts and cities. What is the kind of outlay that you have in terms of reaching out to number of cities and including tinting units across by the end of the financial year?
So as far as reaching out to cities are concerned, I think it will be hard for you to find any state or any corner of the country or any town where Indigo is not represented. And when I say any state, I include the remotest corners of India, whether it is Arunachal Pradesh, whether it is Mizoram, Manipur, or even Andaman Islands or Lakshadweep. We are present everywhere. There is hardly any town where we have not set our footprint. As I said, our tinting machine population continues to gallop at an ever-increasing pace. So if we can add another 1,200 machines in the second half of the year, that would be a tough but achievable target for ourselves. Maybe 550, 575 in Q3 and maybe slightly more than 600 in Q4. If we are able to achieve that, then today our tinting machine population is about 9,100. So the idea is to take it to closer to 10,300 by the end of this fiscal. And this is a process that will go on for many years ahead. It's a slow process because it's hard to find any dealer who does not have at least two tinting machines in his shop, sometimes more than two. So you have to displace one of the larger players and substitute them at the retail counter to get your own tinting machine installed. And that is not always the easiest thing to do.
Just to get an understanding of this mechanism, tinting machines especially, is there a multiplier effect to revenues as soon as our tinting machine gets placed with the dealer?
Very much so. Very much so. Our own observation is that the throughput of that dealer, the moment he installs the tinting machine, typically goes up at least 4x the moment he installs the machine. So it has a huge effect on the outlet of that dealer. In some cases, it could be more than 4x. Some cases, it could be slightly less, but that is typically the kind of delta that we see once a tinting machine is installed at a dealer counter. So it is of tremendous importance for the paint industry to do that.
You're setting a separate team for project sales as well, I understand. How big will this team be, and when do you expect this bringing in results with respect to bulk
It will
sales?
take time. We have already onboarded an all India head for this project business. We are looking at 7-8 states, and we may start with 1 or 2 people in each of these selected 7 or 8 states. Project business has a slightly longer gestation time to meet the builders in that area, highlight your potential there, do sampling, etc. I do not expect very huge volumes to start coming in this fiscal. Perhaps the effect of that will start showing up from the next fiscal. For the larger paint companies, I understand that project business contributes anywhere from 10 to 15% of their top line. I think it may take 1 or 2 years before it starts hitting that percentage of our top line. So one has to be patient in some of these initiatives. And what you start off today will reap dividends in the next fiscal and the fiscal after that.
Finally, sir, you also, I think you have commenced civil works for your paint-based plant in Jodhpur.
That's right.
How much you're spending there, and by when does it come on stream or goes commercial?
So the expected capacity of that is about 90,000 KL per annum. The rough estimated cost of that is about in the range of about 270 crores. We have started civil work. We hope to commission it by March of 2025, if possible, 3 months earlier. That is our goal. And it is entirely being funded by internal accruals.
Mr. Jalan, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Thank you, Mr. Seti.
Thank you.
Yes.